Hello, Warriors. Let's have a good week. Unlike China revising down their GDP, let's revise up our P&Ls. Who's with me on that? Everyone probably, right?
Yes, Dale.
Are you with me?
I'm with you. I hear you and I'm with you.
All right. Well, let's talk about a few ways to do it. Let's see who's here. Who's in the crew right here. Let's see who we have. Okay. Hi, Ryan. How you doing, buddy? All right. So you have a handle on the yen. I'm thinking ABC to 141. Trying the long side.
Dale, you're in the TradeGate hub.
Oh, I'm so sorry, Blake.
Yeah, your charts are on a shrinky dink.
All right. Try this one. I wasn't trying to get a plug in. Anyway, we all right now? So
good.
Pull, a little pullback here and maybe make a run sometime this week with the dollar recovery back to here.
Yeah, it's going to take a break of that 139. That was the area I was looking at on the way down. It didn't last very long, but it sure showed up on the way back up again.
Okay.
So,
all right. I mean, I was, this is all Blake. Okay. But, I was thinking about this, that even if the dollar, if it does bounce, we get some type of recovery. I think it's possible that Canada put in its lows last week. And, any dollar weakness, I don't think we're going to take out 131. I'd buy a pullback in Canada if offered this week, maybe around 1.5, 160 or so. Blake, you still feel the same way about Canada, or was that just a quick reaction trade?
Oh, no, I'm long.
Okay. So you see it as more of a position or to work it.
We have Canadian inflation data on Wednesday, so that's okay. I tried to get pre-position there. So
okay.
Actually, it's tomorrow. I'm sorry, I said Wednesday. It's actually Tuesday. My bad.
Yeah, the commodity currencies. If you want to be long the dollar, they're the ones, because there's still too much mo in cable. I mean, this is just a little consolidation. Looks like it has another run in it, even if it continues to pull back. Look at the highs were all confirmed. And euro, same picture, even stronger. Your EG trade, buddy, is working out pretty good.
Yeah, I'm perhaps maybe going to roll this into a longer term trade. I wanted to tap that 85 as a short term trade, but I've been getting the itch to short some of this extreme rate expectations for the BOE. But we've had that wash out a bit last week, so I'm thinking, if we get a hot CPI number and a run down to 85 and it holds, I'm going to build up a bit of a bigger long and sit on it for a bit longer.
I mean, if we ever get back above these levels, like 87, then you're talking probably what, 89,
even 90s again. If it goes right. But I think that for the pound, the data is going to be very important. Obviously Wednesday's CPI report is the big one for the UK. Cable's had a pullback. Well, if you can call it a pullback. We haven't had a decent pullback for a while, so there is some scope to see a bit of a dip. 130 is your first level, 128.5, 128.20, that sort of area. But if we get hot data and we can't break the recent highs or lows, like in euro sterling, that's going to be a big signal to me that we're priced as far as the Bank of England's concerned. So that will be my clue. If you want to start shorting the quid, look for not making fresh highs when the data's strong.
Okay. All right. I would actually prefer to see a pull back and pull the RSI down to neutral and then make another run and not confirm.
Yeah, that'd be a nice refreshment move, wouldn't it?
Yeah. So, let's talk long term about the dollar. So, I understand the bearishness if you want to call it a rectangle or whatever, some people are actually calling this a flag, and you take 1,400 points and you have a breakdown at par and a half, gives you 86, 86 and a half under these lows. But I still think that there's a chance that we end up with some type of false breakout over the next couple weeks. So, you know, I can't, I don't think we're there yet. I'd like to see, like I said, one more pullback in cable, then rally to 32 and a half or so, and 113s and euro, and try it. But, you know, my highest conviction trade is what happened last week was, you know, if you don't get the message, you're not charting. And any rally back towards 41, you have to sell. I'm long for a scalp, but you know, it's always a bad idea to try and trade a reaction, but I'm doing a bad idea today, trying it, risking 60, looking to reverse up here. So that's where I'm at on the currencies. And I just want to show one chart. S&Ps are, I know Blake probably talked about it. I saw part of it, but I couldn't watch him sweat with his air conditioning failing. I had to go jump into the pool. So let's see, NASDAQ here. The S&Ps, well, these are weeklies, but it could have been a third dry Friday. So there's the RSI picture. It's got the form, you know, still has to do something to the downside. Let's start with a 2-day reversal closing under here. I mean, to really turn it bad, I think it's here. Some people are saying under this low would not be a good sign, under 43.80. And I just want to show what the star of the show did last week. So, you know, these are the chips that we don't want to sell to China. Okay. You know, this was really a star, a comet during this rally in 2023. We're talking about 3-4 bagger on a NASDAQ stock, not a low floater. That's pretty impressive. But this too has the form of a 3. And what's different than the NASDAQ itself is the NASDAQ on the 4-hour confirmed. Okay. See, we confirmed. We're diverging now. This is a daily. On the 4-hour, it confirmed.
You know, it's funny, Dale. On Friday, I was actually I was talking about your 3 drive in our chat room, in the ForexAnalytix chat room, and I'm like, hey guys, you know how many of you guys follow the Dale's analysis, and asked a lot of people if they recognize that 3 drive on the S&P on Friday in our chat room. So
yeah, so could be it's either the S&Ps or, you know, they may be diverging on the daily, but still a lot of mo on the 4-hour. But NVIDIA doesn't have it, and you would think it would, because it was such a star that on both the 4-hour divergence and on the daily. So I think it's a nice spec.
well, we had a lot of that
up.
rebalancing on Friday too. Remember?
Yeah, and what are they going to do? They sell a bunch of Apple shares and Microsoft shares to bring down its weighting. How does that work?
I mean, I'm assuming that's how it works. Maybe Ryan, you have a better indication of that, but I think a lot of it is just move. Yeah, you're rebalancing the whole index, and you know, NVIDIA is going to be part of it, right? So that's probably why there was some selling on Friday in NVIDIA and shifting into other, you know, some other names, just to make sure that the indexes are just not so lopsided. So
yeah.
Okay, good luck to them.
Yeah. Well, if you want, I can go ahead and take over here. I want to ask, well, Ryan, what's the big news that you saw overnight? Because First of all, I know we were just talking about China, but I have to say that China was part of it, and you can see that we had copper's under pressure quite a bit. Copper's down what, 3%?
It's a big move in copper.
It is a big move in copper, and there's a big rejection off a 618 retracement too. So so here's copper, and you can see it at the 618. We're back below the 200-day moving average. That was some big news. I also was staying in line with China. Richemont, which I think is important that you kind of look at this, because Richemont group out of let's pull. They're out of Switzerland, right? They're down 14%, or they were down 14%. Richemont Group, is that correct? Or no, down 10%. Now they're a seller of like Cartier, luxury, yeah, huge luxury brand out of Switzerland. They've reported that their sales to China really slowing, and so this is like one of those. This is one of those luxury brands that really sells aggressively to the Chinese market, and with you saw the Chinese data overnight. I mean, this stock's getting hammered, but that's kind of telling about again the whole Chinese recovery or lack thereof. So very interesting news out of the Richemont Group overnight. So just thought I'd bring that to everybody's attention. But Ryan, what else are you seeing out there that has been moving the markets in European trade?
Not a lot. China's been the big driver, really. A load of banks all cutting their forecasts from 5.6, 5.7, 5.5 down to 5%, getting it wrong as usual. But yeah, it's the old thing. If China sneezes, everyone catches a cold. But we saw this was happening. It shouldn't be a big shock to anybody. The numbers, I looked at the numbers, they weren't overly bad. I mean, you're not talking about a complete collapse in the economy, just not as weighty. You can see industrial production was better. GDP was still higher, not as high as expected, but still decent growth. You ask anyone in the rest of the G7, G10 if they'd like growth of 6.3% at the moment, and they'll bite your hand off. So it's context as well. But market's going to do what market's going to do. Like you say, big sell-off in copper. Aussie not too affected by it. Bounced off the 68 handle. Tested one of the broken levels, but not an outright collapse. So yeah, I think there's a bit of an overreaction to China. And we'll see what happens thereafter. But now we switch to the US data. We see how the US consumer is tomorrow. So yeah, lots in the mix.
But I asked both of you guys, Blake, I'd want to ask you too, and then just take over. That dollar chart I showed and the breakdown out of that triangle. Where are your heads at? That this is a major breakdown that measures sharply lower. Or we're going to get some type of, or else it's some type of head fake.
Ryan, you want to go first?
Yeah, I'm going to say that I think this is probably set to continue, but I wouldn't be surprised if the Fed heads, Powell at the next FOMC draw a bit of a line and come in and doesn't let the market get too dovish. It's all about keeping the message in play. And we know they've done that time and time again whenever the market's got dovish. So I think if you get a decent rally over the Fed, where they come steaming in and saying higher for longer, that's an opportunity maybe to short the dollar. But I think we see this continuation, because at some point rate hikes are going to bite. And I think we're starting to see it perhaps on the consumer savings rates. All the savings that everyone made over COVID have pretty much disappeared. That's
how did they save it so long? That's what I want to know. How did that burn through? It wasn't a lot of money. I mean,
no, but everyone was sitting on their asses getting paid still, weren't they? While things were in lockdown.
Not for a while. Not for a long time. I'm surprised, whatever it is, an extra couple grand a month. really kept people going. Once it stopped, I think most people spent it. I think it's the people on those programs that got like, you know,
Yeah,
28 grand per employee, all that
yeah.
fraud and everything that went on. Yeah, that was a
And,
lot of money into people's hands, that a lot of them that really didn't need it.
and he's just wiped off
Pisses me
39
off.
billion in student debt again.
Yeah, he's trying
So
to
you
do
know,
that too, huh?
yeah.
It's
So all those little things like that give a temporary boost to spending, and you know, people can save it. But either way you look at it, the savings got built up, and now the savings have been eaten into, and that's never a good sign for the consumer. Because
all
if they
right.
were
Yeah.
getting enough money month to month, you wouldn't need to dip
Yeah.
into your savings, would you?
Yeah. Yeah.
Well, I mean, you're talking about like student loan payments. I was just reading this morning, you know, about all the, you know, student loan payments that'll start again in September. So, I mean, you know, I mean, the consumer is going to have a very difficult time going into this fall. I think that's going to be the big overarching theme as we
Yeah.
go into the second half of the year. It's going to be, I mean, the consumers are really going to struggle with all these inflationary pressures. And then, you know, and you're not talking just about the US. I mean, I know there's been a lot of discussion about mortgage rates really adjusting across the globe. Maybe not so much in the US, but you're talking about the UK and Australia, different regions of the world. You know, these higher rates are really going to start to bite. So anyway, Dale, you asked about the dollar index. So yeah. I'm gonna say this: the dollar index is at really critical support. I mean, and I know we broke down, and I think the breakdown is significant. That's why this week, since the Fed is next week, the FOMC decision is next week, and that's going to be the ultimate determining factor, in my opinion, whether the dollar breakdown continues or not. So you're going to have to ask me that question again after next week. But I'll say this week, any rally in the dollar index to the breakdown point, which would be 100.80, has to be sold. That means that if the euro gets down to 111, you have to be a buyer, like it, because this is the breakout point, right? We may stall here, but you have to be a buyer on dips. Yeah, like the sterling, it should be bought on a dip down to 128.5. Euro should be bought on a dip down to 111. And if you look at the dollar index, it's the same thing. You got to sell
up there.
You got to sell up here. But we are at, and you might notice this green line here. Let me make it a little thicker so you can all see it. That is the 618 retracement of this entire move from the May 2021 lows to the highs in September of 2022. That is the 618 retracement. It is also a breakout point. It was a launch pad for the dollar index way back here. So any dip down to that 618 probably will find support this week. So you have to imagine that this week is a bearish consolidation week for the dollar, unless, and I have to give the unless the S&P does a complete reversal. And the reason why it's entirely possible up here is because we have hit the dual 161% confluence last week. We hit that last week. Maybe it's Dale's 3 drive, or, you know, whatever it is.
I like that line too, because that could be a false breakout out of that wedge.
Well, we have channel resistance. We have all sorts of resistance up here, 78% retracement in the S&P. So, you know, if the S&P really starts to feel some downside pressure, I do think the dollar will be responsive from a, you know, risk aversion standpoint. I don't like, I know the dollar will fare better against certain currencies. Like I think it'll fare better against the dollar Canadian. I think the dollar Canadian is going to be a nice long down here. You know, we have Canadian CPI tomorrow, and you know, the Bank of Canada is extremely data dependent, like the Fed right now. So if that inflation data comes in a little light, as we're seeing disinflationary pressures across the globe, if it comes in a little light, you know, dollar Canadian could be trading back up at the 50 DMA or the 200 moving average, daily moving average, pretty quickly. So I think you have to pick your poison when you're talking about dollars and where you want to play it, because I think it'll be stronger against certain currencies. Maybe the Aussie is going to get hit because we have this double top trying to develop, or at least some key resistance. Kiwis struggling at highs as well. So maybe the dollar is going to do better against commodity currencies, but against the euro and the sterling, I don't know. I mean, I just closed out this morning. If you're in the ForexAnalytix chat room, you can see all my open positions because I put them in here. But I just closed out the Euro New Zealand on the long side. The reason why I closed that out is because these commodity currencies have been hit, but I'm not completely convinced that stocks are ready to roll over yet. So I'm playing commodity currencies on the downside and playing the euro, like the euro on the long side versus the Kiwi from last week off of the support. But I'm not 100% convinced that stocks are ready to roll over yet. How about you, Ryan? How do you feel about equities at this point?
Yeah, pretty much the same. I'm thinking Q2 earnings should be okay, even in the retail world. You're talking about retails. I think retails are in danger for the rest of the year as well. So this might be sort of a last look at things doing all right in the retail side of things with earnings and stuff, but moving forward is your trouble. I think the stocks only roll over if we really start to see the data coming off. And that is likely to start with the consumer. We've seen services still strong, jobs still strong, but if the consumer starts rolling, that's going to really get the ball rolling, I think.
Hey guys,
go ahead, Dale. Go ahead.
I was just wondering if we should be paying attention to this new currency that's going to be launched the end of August by the BRICS.
Well, first of all, that's speculation. That's the BRICS. That's the BRIC countries wanting to do, they want to replace the dollar, and so is there going to be some announcement at this BRIC meeting in next month? Look, people have been trying to dethrone the dollar for so long. Is there any?
They don't have to. We're going to do it for them.
Yeah, well, I mean, is there any plan out there to do it? I think there is, ultimately, but
curious about it.
Yeah, it's something that
it's I wouldn't be going to be an instrument that you could trade, is it, right away?
Well, I was listening to Brent Johnson this weekend talk about it because I've been trying to do a little bit of research over the last couple of weeks on it as well. And I was listening to the milkshake. Brent, he does the milkshake theory. Yeah. And I agree with the point that he made over the weekend. That you can try to do whatever you're. As a government, you can say, well, we're gonna try to form this like currency union where we can, not use the dollar so much. But where the rubber meets the road is, whether people decide they really want to do that, because the dollar is where the liquidity is at, whether they like it or not. You know what I mean? So, is it gonna impact the dollar longer term? It's to be seen. But I think that every time this has happened, and I think about way back pre-financial crisis, so 2006, 2007, Russia, OPEC tried to do a very similar thing, and they started to deleverage away from the dollar, and then we hit a financial crisis, and guess where they went running?
Yeah.
They went running right back to the dollar. I mean, it propelled the dollar higher, faster, because you had already central banks that were trying to move away from the dollar. And then when the shit hits the fan, everybody realized they don't have enough dollars in reserves. So anyway, I don't know. We'll see. But the one thing I wanted to bring up really quick, and I didn't get a chance to talk about it during the week ahead video, because I literally, and I wasn't joking, my AC went out, one of my units, and it's the one that powers my office. I was sitting in my office filming the week ahead video, and I was sweating, and I had sweat on the back of my, like, literally my head was sweating, like behind my head. I could run my fingers on the back of my head, and I was like literally sweating. I was like, oh my God, my AC unit just went out, and I'm trying to do the video at the same time. And I figured, and while I was doing it, I was thinking, okay, well, if I don't finish it now, I'll be doing the video in like 10-degree hotter weather in about an hour after I, so I just powered through it anyway. But what I wanted to talk about during the week ahead video is I brought up this recession chart from the this is from the St. Louis Fed data, and I wanted to go over like some of the charts that you see here, and you see how stocks react during recessionary periods. When we go into a recession, that's when stocks really get hit, and it's coming out of a recession when stocks usually recover, because the Fed does some sort of action. They take action by lowering rates, or lowering and adjusting monetary policy appropriately. And I try to discount a little bit of what happened during COVID, because COVID was obviously an anomaly, a pandemic that you don't see all the time. But if you look at, like, this is the GFC, the Great Financial Crisis, this is dot-com bubble blow up. You even go back to the late 80s and 89, right, to 89 to 90. And if you zoom in even here, you'll notice that the stock market really came under pressure during this period of time during the recession. So it's something that we got to be paying attention to, because if we do or are already in a recession, stocks are probably going to succumb to some sort of selling. And I think we're gonna have a better indication, as Ryan pointed out, as we go into earnings this year. We do have Philadelphia Fed
Empire.
or Empire. I'm sorry. Thank you very much, Ryan. Empire State Manufacturing data coming out in a few minutes. Mike says, hey, Blake, how are you guys handling 120-degree heat in Arizona?
What a rhetorical question, isn't it?
I haven't seen 120 yet, but it is, I mean, right now it's already 90 degrees and it's still dark out. So these are the rough days of summer, and we don't see any relief. I don't know about you, Dale, but I don't see any relief on the horizon.
I heard they're not giving out any more building permits in Phoenix because of the fear of water.
Well, yeah, that's like, well, that's at least for the government. It's our governor now, which is a Democrat. So that'll probably change. But for right now, yeah, I mean, we're Arizona, or at least the Phoenix area, is going to be more of like a New York, if you will. Where you run out of land. So New York, it's like, that's why real estate, it goes up, like here in the desert.
Oh, okay. Yeah. There was never a shortage of sand before.
What's that? Right?
There was never a shortage of sand in Arizona.
No shortage of sand, but
land,
of land. Yeah. Or sand, for that matter.
Sandy land.
Yeah. So there you go. Anyway, we've got data coming out in a little bit. We should probably be paying attention to that. I'm going to go ahead and adjust the charts appropriately, and just see if there's any reaction before you I believe you're bringing in Angie. Is that correct?
Yes.
All right, cool. So we'll pull it up here. You can see the dollar index is a little firmer this morning. S&P is, sitting around that 4,500 level. Yields, yeah, I mean, they're a little perkier, I guess, here, and the dollar yen is responsive. Dollar yen's had a nice rally off of 138 this morning. We have an inverted head and shoulder pattern in the dollar yen intraday. If you guys are not seeing it, you can go to the ForexAnalytix. Wait, hold on, let me make sure I got some time. Oops, I don't. But we have those charts are already posted in the ForexAnalytix chat room if you haven't seen them already. Let's get ready for the data. We have Canadian wholesale sales coming out too. So just a little heads up. You can see yields over here to the right. Here's the S&P right in the middle and the dollar index to the left. Empire State manufacturing data, a little stronger than expected. So the euro should slip back towards the 112 level, I would think. But remember, 111 is the big breakout point. The sterling is, looks like it might trade back to 130. What do you do with the sterling here, Ryan?
Yeah, I think 130 is your main level here. Keep an eye on it. The pullback isn't too deep at the moment, but you know, with cable, a small pullback can be 300 pips in this thing. So
right,
130, 128 and a half, and then I've got a fib 128.20s.
If you guys haven't seen the inverted head and shoulder pattern in the dollar yen, a lot of people think that low from Friday was it because it was the 200 DMA. So if we do get a little pop in the dollar the dollar yen, that'll take us just about to 141. So and probably a great place to be on the short side, to be honest, especially ahead of the Bank of Japan and possible adjustment in yield curve control. So think about that if we get a pop back above 139 in the dollar yen, and that's your free trade of the day from the ForexAnalytix team.
Well,
so
we gave it twice then.
Yeah, come join us in the ForexAnalytix chat room because we talk about trades like that all day long. So Dale, have a great interview with Angie and the Goddess of Grains. Ryan, thanks for being here. Stay cool, everybody, because it's freaking hot outside, no matter where you're at. So we'll see you tomorrow morning on F.A.C.E once again. And for those of you in the ForexAnalytix community, we will see you on the morning edge in about 45 minutes.
Thanks, Blake. Thanks, Ryan.
Cheers,
nice
guys.
job.
Thanks,
nice
Coach.
job, the three amigos. So thank you, guys. Hello, Angie. What a great time to be talking about the grain market. Welcome back.
Yeah. Thanks for having me. Got some news this morning, I guess we can talk about, but glad to be here. First day back from vacation, so be gentle if you could.
Okay, I promise I will. Can you see my charts, Angie?
Sure can.
Okay, so what I'd like to do is just run through the grains, and you give me what you're seeing fundamentally compared to what I'm seeing technically, and I see if the narratives are running together at all. How's
I like
that
it.
sound?
Sounds good to me.
All right, so let's start with the wheat. Okay, so and let's go to a daily. So to me, I know it was a long time coming, right? Thought it might have been here, thought it might have been here. Finally here, this was pretty impulsive. So we've had this pullback here. What would support my technical bullish case in the wheat market besides perhaps Russia not cooperating with the grain deal and letting Ukraine get their wheat be able to export it?
Well, I think that's the biggest story in wheat that we can't ignore is what's going to happen with the Black Sea grain corridor and what we're going to see happen, specifically more so with Russian exports going forward, I think, than Ukrainian exports or what the Black Sea grain deal allows or doesn't allow. With Ukraine, over the last year and a half, we've spent a ton of time really working on secondary sources, secondary options when it comes to exports. So the Black Sea corridor isn't as vital to movement as what it was a year ago, but it's still going to kind of provide that headline volatility just because it gives us something that we can trade on. In addition to that, though, we have a story out of China that we're really kind of watching where they had some pretty significant rainfall happen right ahead of wheat harvest in one of their main producing provinces. And that probably caused some problems when it came to about 20 to 30 million metric tons worth of wheat production. And so what does that mean going forward? China's kind of this sleeping bear to a certain extent. And I think they're the support that's underneath all of these market sectors. But, when it comes to wheat specifically with the damage to their crop and, watching what that could mean for imports going forward, that could have a huge impact on global market structure.
Okay. That makes sense. I believe, with their economy weak, the last thing they need is to have problems with food.
Yeah.
for their population, right? Because
Mhm.
people are already probably disgruntled. Anything in South America we should be looking for in the
Not as much
ongoing?
in, yeah, not as much in wheat. I mean, Brazil has really expanded their production over the last couple of years, just because higher prices have incentivized them tossing some additional wheat in. But when it comes down to it, their exports are going to really prioritize soybeans and corn. So from an overall standpoint, they aren't going to really impact the global market. But we will be watching a recovery, or a hopeful recovery in production out of Argentina this winter, or this year for them. It's their fall, or they're heading into winter down that way, or they're in winter now. And so they've gotten a wheat crop planted, and they've had a lot more rain than what we'd seen last year. So there's value there, but then we're also watching what El Nino could do with Australian wheat production and some other things. So there's
Okay.
several different stories at play that could really keep this market on its toes for the next several months, to be honest.
Right. Australia could be a big story, right? Because
Australia, yep.
we're already into the next crop for us is winter wheat, right?
Yeah, we will, once we harvest grain here in the US, we'll plant winter wheat. Well, in Australia, they've had their their wheat is planted, and they'll be looking to harvest that as we enter into winter here. So how the weather plays out here over the next few months will really have big implications, or big impacts on their production. And Australia's had 3 record wheat crops in a row. Kind of been one of those quiet stories. La Nina tends to impact weather, pretty poorly across much of the world. But Australia has been one of the beneficiaries when it came to above normal rainfall and somewhat benign temperatures.
I see. So Australia could have not enough rain. So did you build that silo yet?
You're right. I'll convert a barn over to flat storage if I need to.
Okay. Well, start stockpiling. All right, let's move to the beans. Much more of a weather market. When the
Yeah.
Midwest had those big rains and floods, seemed that it supported bean prices. It was probably too much rain for the beans, and the corn loved it. So can you explain the action on that weather market? What drove up beans?
Yeah. So, I mean, what we saw to start the growing season is, traditionally a dry May is welcome, because it gives us the opportunity to get much of the crop planted. Sorry,
Yeah.
It's summer break, so we have a kid that wants to do something at the door. But
Okay.
so we were able to get most of the crop planted and everything. Dale, one second for me, please. Show everyone the chart.
Okay. So the crop is calling Angie, and she's has to jump on her tractor for a little bit. Anyway, guys, so I rated in relative strength beans, wheat, then corn. But even corn looks like it's
All right, I apologize for that.
Oh,
So
that's okay.
So we started the year with dry weather that was really beneficial, but as we rolled into June, it continued to be dry, which really messed up, or really kind of created some production concerns about what we would see happen there, and how, what we could see from a yield standpoint. We then had a huge surprise from the USDA at the end of June, where they cut acres by about 4 million acres. So that really kind of cut into production potential by about 200 million bushels, and created some real concern over what we would see happen. The USDA then subsequently cut export demand pretty significantly, that helped to offset a lot of that cut. And so now we wait to see what happens as we work our way into August. Soybeans are a crop that are made in August. And so
Okay.
whether or not it rains is going to have a huge impact. The USDA is currently forecasting record yield. And so there's a lot of time left in that market structure to really kind of see how this plays out. In addition, China demand, everyone's just really optimistic. I think my favorite thing about, poor China data is that everyone kind of continues to insist that we're going to see stimulus, and that's going to help really support Chinese demand. We have seen some of that. So there's a lot of things happening in soybeans right now that have really been, kept the market on its toes, and that's going to continue. I mean, we have no idea what production is going to look like this year, really, until we get into September.
Yeah, maybe we're gonna have it's not gonna get the rain because of super Grand El Nino.
Yeah, I mean, it
That
does. That
possible?
is one thing that we will be watching is the forecast does look like it could warm up and dry out a bit as we work into August. And so that could have a big influence, but we get decent rain and you know, if the Brazilian crop is able to get started relatively okay, you know, then things will be different. But that's really going to keep a risk premium in this market. We don't have any room for any type of production error or any type of production hiccup. And so that's really going to keep us supported. You know, I think we'll probably trade between 13 and 14 for quite some time on the November board, just until we get a better feel for where we're heading market direction wise.
Looks bullish to me, and we get through last week's resistance, this candle.
Oh yeah.
Also, it could set up a 3 drive at new highs over $17 anyway. That looks technically the strongest, followed by, you know, wheat and then
Yes.
corn. Any hope for a turn in the corn market down here around $5? We had a nice little bounce.
Well, I think corn's kind of similar. I mean, if you're going to see wheat and soybeans stay supported on different factors in the market, then I think corn's going to kind of get some support just simply because it's very difficult to see corn just kind of go off on its own path. But from a fundamental standpoint, you know, corn really doesn't have a big story unless we see something develop either, you know, like a huge increase in potential Chinese demand back to where, you know, they're close to 30 million metric tons of corn imports versus their current forecast of 17 million metric ton. Or if we were to see, you know, August turn off dry and run into some sort of production issue, then corn could potentially have a story. But from an overall standpoint, you know, corn is one of those crops that a lot of folks really like to grow across, you know, across the United States and even around the world for the most part. And as we continue to modernize our agricultural practices and things of that nature, you know, production will increase in different places. And so
Yeah,
we've just seen that the supply of corn globally is higher than what we've seen before. I mean, outside of the US, and the US looks like it'll have a pretty solid crop this year if weather cooperates. So, you know, corn has less fundamental incentive to really kind of rally, but it could see it if we see soybeans and wheat kind of pick up on a story.
well, deer and cat happened to have they had very weak patterns up until June, and they've
Mhm.
come to life. So there must be, maybe these prices are putting money into farmers' pockets and they could be buying equipment. Do you see
I think
that?
that, yeah, I think that helped. I think you saw the big time rally in the market structure. But in addition to that, I feel like everyone has really kind of transitioned into a more optimistic feeling about just about everything. But when it comes down to it, Deere, you know, Mosaic, like you're showing, any of these agricultural companies, you know, they're global as well. And they're heavily involved in global expansion when it comes to, you
Well,
know,
this is
production.
fertilizer. This is
Yeah.
fertilizer, right? And
Yeah.
potash. They have weak chart patterns. So maybe that's what's good for farmers, because the biggest complaint a year ago was the cost of fertilizer. Now
Hmm.
it came down here on my board on the, the stock price. Have fertilizer prices dropped along with the share value of these fertilizer producers?
Yeah.
Or is it a
Fertilizer prices.
or is it a bunch of duty?
No, fertilizer prices have dropped off pretty pretty significantly over the last year. Especially we've seen just a real decline. Supply availability has been helpful. We'd seen a run up in fertilizer prices, you know, prior even to the invasion of Ukraine, just
Yeah.
on some different tariffs and trade practices that the US had put into place. And then of course we had the invasion. But then once we realized that we had, you know, relatively healthy supplies around the world and could really offset some of those reductions in supply availability with availability of, or with efficiency in farming practices, you know, it just kind of helped to calm everyone down, and now prices for inputs have gotten back to a more normal level.
So is your group still worried about the dollar, and shouldn't a weaker dollar be supportive for grains? or
The
it
weaker
doesn't
dollar
matter?
is supportive for grains. Yeah, and I think that's part of what we've seen from a support standpoint here over the last week or so in corn and wheat too, is that we've seen the dollar fall off, and a lot of people have been bearish
They're-
on dollar direction. And so, yeah, I
Yeah,
think we're kind of watching that to see what happens, because hopefully that'll make us a little bit more cost competitive. Right now, the U.S. is the
right.
most expensive supplier of goods, grains in the world. And so if we do
Because
see the
of
dollar get a
dollar
bit
strength,
cheaper,
because the dollar really hasn't been, dollar's come down quite a bit
no,
in the last year.
we're just expensive because we're expensive. We have a domestic market structure that is strong. Like ethanol demand is strong, soybean crush demand is strong. When it comes down to it, when we have tight supplies, as we've seen the last couple of years, we tend to see our domestic market, the cash market, strengthen. And if you run into a situation where outside producers like Brazil, Ukraine, Russia, any of them are able to offer it cheaper into the world, the US is all right with kind of giving up some of that export business, or has been. And so that's why
Yeah.
we've sat here and been a little bit more expensive. It starts to matter when it feels like we have stabilized supply, as we're seeing in corn right now.
Yeah.
But yeah, we'll continue to watch it.
Okay. So do you remember when they had open outcry on the Board of Trade? Didn't during this month coming up, when we were in a bull market in beans in particular, that you could see outside from the trading floor. And when it started to rain, they would take the beans down, but the trade was by the rain. Do you think we could
Right?
be
Yeah.
looking at, now, I guess if you're in the Midwest, you could just look out your own window, not the trading floor window. But rain breaks the way to trade beans this summer.
Right. Yeah. I mean, it's still something we joke about quite often. Oh, it's raining in
Oh,
Chicago. The market's going to
everyone
be
laughs
trading
at
lower.
all my old tricks, Andrew.
Right. Yeah. We
You
still
know,
talk about that quite a bit, but yeah,
all
it's
right.
definitely something I remember. The skilling forecast was always an important thing.
Yeah. So, I just want to, show your website. And how's your new business, which isn't so new anymore?
Right. 2 years
how are,
old now, doing
it's
well.
amazing. Yeah, it's
crazy.
amazing how fast things really just pass you by. And this is where you could reach Angie. Here's her website. So she helps farmers hedge their risk. Is there ever a time not to hedge?
No, not that
No?
I can think of. I mean, there's been times where it would work well if you're lucky, but
Okay, so it's about
I'm not
luck,
lucky.
and you don't gamble. You don't gamble with your business.
Yeah, I have
It's not a
definitely
spec
learned.
trade. You use the
Exactly.
markets for what they were
Yes.
built for hedging.
Mhm. Yes,
Okay, so
100%.
are people doing a lot of hedging at say these prices in beans?
In beans, we have been making some trades. Yeah, we've had some farmers adding some sales up this way. We've been up here before, so it cleaned out some of the open orders that we had put in place, when we were below $13. So we've seen some of that. Corn slowed down pretty significantly, just simply because we've been much higher. We had a lot more in the way of sales put on when we were up towards $6. And so we're just kind of sitting here waiting on corn. We're in the middle of wheat harvest right now here, so we do have some folks getting ready to add to their wheat
That's the
sales
spring
as
wheat
harvest
that's coming
progresses.
in.
Soft red winter here in the state of
Okay.
Michigan, white
Oh,
and red
wow.
actually, but yeah,
And
we're the fun wheat, cakes and cookies.
oh, okay. So see what she knows. She even takes it to the kitchen.
Right,
So,
exactly.
so Angie, do you trade at all?
Mhm. Well, I manage physical positions for my
Okay.
customers, basically. So
All
yeah,
right.
I don't do much
Okay.
trade. I just told you I'm horribly unlucky.
Right. All right.
I am more of a cash trader than a spec trader, and I like to be able to have. I don't want to have my position influence my opinion in a wrong way as well, and so
Yeah,
I
talk in your book.
oversee. Yeah, yep. So I oversee the physical movement of about 10 million bushels across the state of Michigan. And that is, we manage spreads, basis, and futures in doing that.
Okay. Well, I think that this is one of the most overlooked sectors in the market going forward. I like that hat.
I designed it. You can buy it.
Oh, okay.
I'll order you one and send it to you, Dale, since I've been on the show for a while now.
Oh, and that hoodie looks good. Yeah, I'll advertise you in California.
I like it.
But Angie, really, are you excited about this summer?
Yeah,
And
I mean,
fall?
it's been a fun summer. It's been a great I feel like we're finally taking off. I feel like we're getting our footing business wise. I feel like that's very valuable to bring this cash market insight to what we're doing. And
Yeah.
so, you know, summer wise too, I live in Michigan. So there's no time better than July and August in Michigan, honestly. Like I wish I could bottle it. It's amazing.
Beautiful
So
weather,
yeah,
you
it's a
mean?
great summer.
Yeah, beautiful weather while the rest of the country is cooking. What's going to be
Yeah.
the high of the day there where you
I
live?
think we're
What
upper 70s, 77, 78, maybe low 80s this week. It'll be a little bit cooler than normal, they say, but
Okay.
absolutely gorgeous. Can't complain.
All right. Well, okay. Fix up my guest room.
I will do
I'm in
that. Yeah.
110 today here.
Oof,
So
no,
yeah,
I couldn't do that. We get to sleep with our windows open and everything here, so no
yeah,
complaints on my side.
yeah. Well, you know what? It got to the point where I couldn't do you know, December through April either.
Right.
The opposite, you know, the
That's
opposite
a
extreme.
yeah.
Yeah.
So and when in the wintertime, I won't complain or I will complain and I can come visit you. So
All
so
right.
yeah, no, it'll be a fun summer. We've got
All
all
right.
kinds of stuff happening.
Okay. And if you want an update on the dollar, welcome to join you guys again. A lot of people are calling this a major breakdown.
Yeah.
So we'll see. I appreciate being able to marry up the fundies with what I'm seeing in my charts, Angie. I knew.
Oh, thanks for having me.
Yeah,
And sorry for
yeah.
the child outburst, but
I
that's school.
no
I'm
one
not
even.
counting, but school's 6 weeks away.
Okay. All right, Angie Setzer, everyone, and you can find her on Twitter at the Goddess of Grain. And I really think this is an exciting area of the commodity market. I think it's going to be part of, you know, people that believe in the super cycle in commodities. It's going to be agriculture. So Angie's a good person for having intelligence gathering on the market. You can't know everything. You find smart people. And I'm glad we found you, Angie. Thanks for being with us today.
Thank you so much for having me.
Yeah, have a great summer and bumper crop for you and all your clients.
Thank you.
All right, Angie Setzer, everybody. You can join the team in 15, 17 minutes on the morning edge. Don't just count your pips, count your blessings. Yen is heading higher, so that was not a bad idea. Yeah, so have 60 in it. Remember 141, Blake's there too for a sale. And what do we have in the S&Ps? Down 5. All right, everyone have a great day trading. Don't just count your pips, count your blessings, and we'll be back with you tomorrow on Turnaround Tuesday. See you guys.